Hey, good morning. Good morning. This is Julie J. Auto Trading Strategies. I want you to run, not walk, to YouTube and watch the latest version of the Market Huddle. They have interviewed this guy called Pax Trader, and I highly, highly, highly recommend that you take the time to watch this because these pit traders are talking about this 1 minute opening range and how they trade it. And what they're doing is giving us the recipe on how to not only fund your own trading, but eliminate risk pretty much. And I love what they've done. So right off that first minute, I set it up for my opening range. They are talking about hitting the bid using order flow off of the first 30 seconds. But if you're hitting the bid after that first 30 seconds, you would have to be hitting that next open, which would be a 2-minute open. But anyway, not to split hairs here. The point is, as you are trading, they say to their recipe of 10 points for the ES or the NQ and 4 points for the ES. So 4 and 10. And basically what that looks like is after you put 2 contracts on, you draw your line in the sand at that level, and the second trade that you make has to be both your stop and your open have to be above that line in the sand. So my line is the wrong color. Do that again. So here's your line in the sand. So you have to be above that for both your stop and your open. So there's no way you can lose that first winner. So you put 2 contracts on, you take one off at the target and draw a break-even stop at that location. So that second contract, whenever you get a signal to re-engage, the stop must be above that line in the sand. Above it, not below it, above it. So that way you preserve your capital. And just having a directional trade plan versus trading long and short improves the strategy. I back tested it over 30 days and got a good profit factor, 465%, profitability 73%, and a profit of 1695.40. So this means you would divide that by 2 and you would have $800 or $900 profit for the month. So that would cover your fees and expenses and stuff like that. And you'd have the other half to trade for the afternoon session that you can either use as a runner or take other 10-point trades from. So I love this methodology, get paid to trade, and it is pretty much a high probability break-even strategy that allows you to trade for the rest of the afternoon. You can greatly maximize it and add alpha to it if you are purchase the profit target indicator. I use the PT indicator to generate that alpha for me automatically. I just use 2 times the profit target. And so we're only taking 1 trade. Again, this is the money management. Max number of trades allowed is 1. So we're just taking that first trade of this trading session during this time period, 30 days. And when I increase the alpha by using my indicator settings, that kicked it up. Check this out. Exponentially, you've got a 12.57% profit factor and a 93% profitable. So yes, I mean you can, and we're only trading long. Remember I said at the beginning we were going to have a bias. Usually you use your market analyzer, trade your bias, and so that eliminates these errant short trades. You're just sitting out of it. So if you look at your analysis here, you can see it was an excellent trade for the month of December, all month. Excellent, excellent trade. So go back and look at, 90 days of it. It very much helps to have, like I said, your bias, your linear regression, your momentum. Use the tools that we've already developed with this to use as a filter. Just because you have a close over a 1 minute opening range may not mean that you want it. So we'll put this together with other information we have, like gap runs. And also we'll have that second contract to trade. So our overall performance might, not be as great because we're going to be trading that second contract, hopefully to make more profits, but I'll probably, diminish those excellent, trade statistics. But definitely something to think about. We'll frame getting ourselves paid to trade on these high probability setups that are easily achievable. Do you remember my tick chart? Y'all need to go back through this. So instead of just using, this is what they're doing, they're just using a $200 metric. 4 points for the E-mini is $200. So whether you're trading the bonds, the E-minis, or whatever, crude, you would need 20 ticks. I haven't finished the calculation rows, but I will. I'll get that updated. But definitely $200 for that first contract. And instead of, so we're trading $400 risk per day with this, and with the goal of locking in 200 and then using 200 to trade for the rest of the day. But if we were to start that initial trade at a higher contract rate, so work ourselves up to like 5 contracts, then you're talking your costs are being covered in column 1. Anything over that you can make is pretty much pure profit. So you're definitely trying to increase your contract size right out of the gate on that first contract, on that first trade of the day. So there is how he was able to pyramid this very quickly and get to those high numbers that he was telling you about. He's just pyramiding this first trade by adding contracts to it, and that's pure profit. So I like the premise. So if you can get a bias and you can increase the profitability, this was 1 month on 1 contract, or 2 contracts. Yeah, I think it was, let's see how many I had. Actually, it was one contract. Yeah. So just back test this, and we'll run this in the trade room and talk about it, but definitely check out the webinar, whether you're using his 40 ticks profit and stop loss to generate his alpha, which is good, or using our indicator, which kicked that up exponentially, which is much better. Much better. Oops, wrong one. Where'd you go? There you are. 12.5% profit factor and 93% profitability. I would say so. Definitely worth checking out. All right, guys. Thank you so much. I'll see you in the trade room.